Good morning, everyone. This is Kathy McBreen of the Spectrum Group. I'd like to welcome everybody here for our monthly webinar and talk a little bit today about what we're going to cover. The first thing we're going to talk about is our monthly Spectrum Affluent Investor Confidence Index. And the second thing is a new report that we did, a white paper, which you can access for free, which we call Snap Judgements, Do Visual Impressions Impact Financial Advisor Selection? And we'll go through some of the findings of that later on in this little webinar that we're having. Just so you know, today, after this webinar is over, we will be sending you a copy of the presentation materials. And if you have any questions or you want anything else, please email us and let us know, and we'll be happy to follow up. First, I'd like to introduce myself. I'm Kathy McBreen. I'm the Managing Director of Spectrum Group, and I'm here today with my colleague and my boss, I guess, George Welper.
Good morning, everyone.
So first, I want to flip to page 4 of your of this presentation. And George is going to talk a little bit about our monthly index.
Thank you, Kathy. As a refresher for some of you who are joining us for the first time, our index has been one that we have been conducting research on since 2004. It's with wealthy investors in America, over $1 million of net worth and $500,000 of net worth. What's interesting this particular month, and the results are always released on the first business day of the month, so we released them this morning, is that for the first time in 3 or 4 months, we are seeing a downtick in millionaire and affluent investor confidence. The affluent investor, which is the $500,000 and above households, dropped 4 points from last month, and compared to a year ago, it's down 8 points. And then the millionaire investor confidence index, which always tends to be a little bit more optimistic than the affluent market in general, and still is this month, dropped 6 points from last month and 10 points from a year ago. I always think it's important to think about this index from the concept of sort of trailing 3 or 4 months in addition to looking at the current month. And so you'll see, as I mentioned before, that this is the first downtick we've had here in 3 months. And it's now starting to move downward from closer to where it was a year ago, but also more importantly, anytime we see a tick downward, we start thinking about what's happening. And you'll see some of the detail here, but it's quite interesting because this is what I would call a month for which there is some contrarian, confusing sort of messages from the wealth market in terms of how they're feeling about things. One of the things we look at that drives this index every month is what wealthy investors think about a number of factors in their own personal household, or we call it the household outlook. You can see last month it ticked downward. It's a little bit flat this month. But after a few months of being a little bit more optimistic about things, we're starting to see a trend downward. And so even the fact that this outlook trended upward a little bit from last month is interesting in that a number of factors that drive this index were down. But you'll see that compared to where we were a month ago, which was the 17.8 now and was up from last month, compared to last year, you'll see that all these factors, household income, the economy, company, the health of their employer, and their overall household assets. The biggest driver here that's impacting this not negative trend overall is what their outlook is on the economy, which is interesting that the economy outlook has dropped. All the other sub-indices have gone up. And so the economy is what's driving what people are worried about, which is quite interesting because you see some positive trends in the media in terms of what they're saying people feel about the economy. So that and company health being somewhat flat will be a driver for what happens next month. Throughout this year, we've decided to look at our index from a standpoint of what people indicate their preferences, but leaning towards in terms of political preference. And as we've seen the last few months, you start seeing pretty significant differences when you look at the underlying detail between Republican compared to Democrat compared to the independent voters. Where overall the Republicans and independent voters are somewhat more in sync on the issue of the economy going forward. And those are pretty dramatic differences from what the Democrats feel about the economy in terms of their what the economy means for their outlook in terms of their household. Household assets, interesting enough, for all three affiliations are trending somewhat positive. But when you look at strictly those two big drivers of the economy, and then the other interesting is that the independents and Democrats are closer on the overall household outlook. So you start seeing some very diverging attitudes about the market, the economy, and investing when you look at things different by party. We rotate a question every 3 or 4 months in terms of just sort of a general interest question. This particular month was what story in the news is affecting your economic outlook, and it's not surprising, given what we just saw and given what's happening in the country right now with the presidential election, that the political environment is by far the biggest impact in terms of a news story. Interest rates at the moment don't seem to be a big story. They will be if the Fed actually does increase interest rates as predicted in the next few months. But it's all about politics in 2016. In looking at this historically, you'll see on the left-hand side the political environment going all the way back to November of 2014, where you see in November of 2014 being an election year, national election year, was quite high. But typically every other month or every other quarter when we ask this question, it's not that high. But it will resonate very high between now and the election in November. And so there isn't much I can say about changing that, except that everybody should buckle down in terms of what people are thinking about with the election. In thinking about sort of, I think, the most valuable part of this index for advisors and providers is in particular what wealthy investors are saying they're going to invest in the next 6 months. And we look at sort of traditional asset categories, stocks, bonds, short-term investing meaning cash, stock mutual funds, fixed income mutual funds, and real estate. Interesting trend in terms of bonds, where this was a pretty significant uptick in 1 month, where people are starting to be cautious, be conservative. I find that interesting because if interest rates rise, and some of the folks buy bonds at lower interest rates right now, they're viewing it more as a rush to protecting principal as opposed to any income in retirement or income streams off those bonds. But the equity market interest has dropped. And cash, which dropped last month, meaning people on the sidelines, is leveling off. So that's one we'll take a look at. When we do the same analysis looking at investment trends by their political affiliation, you can see that Republicans are far more interested in equities. Independents are far more cautious in terms of fixed income. And the category on the right, which is one we also look at, which is completely on the sidelines, not investing, is quite strong, in particular with Democrats, you can see. So Democrats are willing to say that they're on the sidelines and they're not as convinced about the economy, about the equity market, even though they felt pretty strongly about the economy. So you can start seeing some very interesting sort of counterintuitive trends when you look at some of this data. We should have said that if you'd like to type in a question, feel free. We did have a question come up here about bonds and why bonds are increasing. A little bit is what I said, which is in addition to cash, but bonds are a stable investment in the minds of these wealthy investors, and that especially those that are a Democrat in particular seem to be far more interested in not investing. You look at individual bonds, Republicans, in fact, are the highest category of that. So bonds are now looking as a safe category for investors to place their money during this election year.